Welcome back to another trade recap. It's been a typical December trading month. I've had several losing trades, but I'm happy with 90% of the trades that I've taken. I think there's only one trade that I wouldn't take again. I also had a losing December last year, but I continue to trade this month because trends do happen. Like, we do get some big moves, which you could be a part of. And in my backtesting results, there's no correlation whatsoever between trading in December and a negative return. I've been working on an interesting project with two of my trading partners, Marco and Nico, for a while now, and I'm excited to say that in the next 2 weeks we'll be able to reveal more information about this project. We'll be drip feeding more and more information. We're also going to be talking about a new entry that we've been testing, which is quite exciting. I mentioned in my last video that I've purchased a 200k Blue Guardian challenge because they had a nice Christmas discount. So my goal to become a 7-figure funded trader is being pushed back into 2024, and I'm very confident that I'll be able to achieve this. I currently have $1.1 million in ongoing funding challenges. So because this is the last trade recap of the year, I thought I'd give a quick summary of the yearly results. So from January, I have taken 74 trades, which resulted in 84.75% profit. And that's uncompounded. So compounded trade by trade, that's well over 100%, which means I can proudly say that I have doubled the balance of my personal trading account this year, which is a big achievement. I don't do 12-hour work days or anything. I just work on my trading 1 or 2 hours every day, and I've done it for years. And that's all it takes. So this month I took 6 trades, which generated a return of negative 3.78%. I'll go over these trades now. The first trade that I took this month was a reversal on EU, and I gave this trade an 8 out of 10 for 2 reasons. The first being this range-bound price action here. We were breaking and retracing on both sides, which isn't a positive sign. Typically, when you want a channel, you want only breaks of the lows and no breaks of the highs. The reason this is not that bad of a warning sign is because up above and below this range there are liquidity areas, and you could say that we descended into the lower liquidity area, so a reversal is more high probability. So, you know, if I did decimals, you could give this like an 8.5 out of 10, but there is like a smaller channel within a larger channel here. The second warning sign is a bit of an interesting one. It's these 2 candles here. So you could say there's 2 ways you could look at this. Either momentum has been lost, or momentum has not shifted. So after this momentum candle to the upside, personally, I'm not seeing a shift until I see a momentum candle in the opposite direction. Sure, you can say that you see a slowdown, but the whole point of this strategy is that you're setting your order down here. So if you want price to come back, you need it to show some kind of pullback candle. And I'd rather my pullback candles look like this than like this, you know? And unfortunately, the next candle, maybe a little bit of a shift. I wouldn't say so. We got a big wick on the underside. We were just tagged out with my 9 pip stop loss. If I was continuing to use the 12 pip stop loss, I think this would have been a reduced risk loss, but this did run into profit for a little while, but I was tagged out prematurely, and you'll see this is a common theme this month. I was tagged out with the 9 pip stop loss a few times, which you could say December is possibly a more volatile month, but yeah. So that's the first trade I took. It's a 1% loss. So the second trade I took this month was a continuation on NJ, and I loved the price action in this trade. I gave it a 9 out of 10 just because of the wickier break, but everything else is pretty much perfect. This kind of price action here, if I take this back, this like trending price action is so high probability, and most of the time from like these kind of candles we just continue going up and up and up and up. So I was looking for like any excuse to get in, and this was enough of a break for me even with the wick. It's all about prior price action. The entry is just a way. Remember, the entry is just a vehicle to get into good market conditions, and these market conditions were really high probability. You could even say that like we tapped the high here, a little bit of a descending as well. But yeah, this wick, all these momentum candles to the upside, this trade was nearly perfect. It did result in a 1% loss though, and ended up ranging around, I think. This leads me straight into the next trade I took this month, which was a continuation on NJ, a bit more of a larger continuation, almost a combo. But this was the one trade which I wouldn't take again. I'd give this a 6 or a 7 out of 10. I did take this trade early in the morning, It's kind of unavoidable to take average trades, but I try to limit them as much as I can. There were a few warning signs here, including this is more range bound. On my phone, I was seeing it as more ascending, possibly a liquidity grab. There's a shift here, so this is possibly a liquidity area, even though we did kind of take out that liquidity. There's a slowdown. These three candles barely breaking lower, struggling to come lower, and then there's also a shift to the entry. At this point, not really seeing a shift. In fact, if you invert it, it kind of looks pretty good. You can kind of see what I'm going for with like a descending push up, and then realistically the only warning sign at this point is maybe a bit of a shift here and a slowdown there, and even then this would be like a 7 or an 8. So really not happy with this trade. As soon as I got tagged in, I set my stop loss to break even, because when I got to my computer, I was like, I shouldn't be in this trade. This isn't part of my edge. So I set my stop loss to break even, and price moved down. And at this point, I think this 1 o'clock candle, about 1:30, there was some kind of news, and I got tagged out with spreads for about 1.22%. So thankfully, this did end up working in my favor in the end, but I wouldn't take this trade again. I don't recommend taking trades like these. There's like 2 or 3 warning signs here, but yeah, as on my phone, not much I could do about it. So the 4th trade I took this month was also on NJ. This was towards the end of the month, and there were a lot of setups forming. There was like 2 or 3 setups that formed towards the end of December. It was quite active. This trade I gave it a 9 out of 10 because there's a little bit of a shift to the entry here, but to be honest, I wouldn't even say that this is a shift in momentum. This could potentially be a 10 out of 10 trade. Unfortunately, I just got tagged out with my 9 pip stop loss. If I had 10 or 12, I think I would have just about stayed in this trade. And those that are continuing to use a larger stop loss than me are currently running in like 11 or 12% profit. But although initially this was a bit frustrating because I have obviously taken like 3 losses up to this point, or 2 losses, and it would be good to have a winning trade naturally, because obviously now I have a lot of funding, I've got a lot of challenges I want to pass, so there's a lot of money on the line. So this is potentially thousands of dollars missed because I got tapped out by a pip. But realistically, I have a lot of backtesting data. I changed my stop loss to 9 pips with a lot of logic behind it. And I know that there's plenty of 15% trades that I'll miss. There's plenty of, I think there's even a few 20 and 30% trades that I miss. But even then, with a 9 pip stop loss over hundreds of trades, it works out better for me based on my data to use 9 instead of 12. Remembering this, I'm completely happy to cut off a few 10% trades to continue using my 9 pip stop loss. So the next trade I took was on AJ. This was around the same time as the NJ reversal, I think within 24 hours of it. I gave this trade an 8 out of 10 for 2 reasons. The first being that we're kind of breaking and retracing here, but there's not really much shift in the pullbacks. So I would say that here we're maybe descending, could say we're trending correctively, but at this point that price action is really starting to build momentum to the downside. We had this nice impulsive candle, a small 2 candle pullback with favorable wicks, and then a 3 candle break to the downside, which is the focus of this really. Prior price action, we're kind of trending. You could say that, I mean, we're within the high and low, but this is kind of ascending here. We didn't really take out any liquidity above the range. We just barely broke it. So I'm not really calling this a liquidity grab, but we were ascending, definitely ascending. The second reason this is an 8 out of 10, not higher, is because this is a bit of a steeper flag. So some people, I think they stayed out of this exclusively because this is a bit of a shift in momentum. But for me, there's no shift here at all. Yeah, this is a good trade. It resulted in a 1% loss, but I'm very happy with it. So the last trade I took this month was a continuation on AU. I gave this a 9 out of 10 just because prior price action was range bound. Although I have been told that wickier pullbacks like this may be a warning sign on AU, which is something to look into. But even then, this is depending on how much of a warning sign that is. I'd still say this is like an 8 or a 9 out of 10. This is still a solid trade. I mean, prior price action was ascending. We kind of went into a range. But like this here is nearly perfect. I think some people were even put off by the break, but for me, like, that's quite a good break. Maybe it's too wicky for them, but that's not a large wick by any means in this pair. I mean, look at the other wicks. There's not many wicks smaller than this. I think it would be a little bit fussy to not take a trade exclusively based on that, but I get it if you're also taking into account price action. But I got tagged in with minimal drawdown, and unfortunately I had quite an aggressive candle taking me out afterwards. This was right before market close on Friday, before the new year. So I guess I'm kind of grateful I don't have to hold a trade over the weekend, over the new year. But yeah, that's the last trade I took this month. So there we go, that's the end of the year. Thank you guys so much for following along these trade recaps. I hope that they've been useful to you. It's been a funny year, you know. We've had to learn to trade a lot more conservatively. We had all our returns from 1 month pretty much. And going into 2024, I'm feeling very, very confident, and I'm excited for a fresh start. As you can imagine, I love getting out a fresh trade journal and having all my logs start from zero. It's a good feeling. So if you've watched the end, consider leaving a like, subscribe, and leave a comment. I'll get back to you. Hope you and your families have had a good Christmas, Happy New Year, and I will see you next year. Thank you for watching, everybody.